everyone, and welcome into crushthestreet.com. I am Kenneth Amaduri. We got a brand new guest on the line with us today. His name is Kevin Werbach, a professor of legal studies and business ethics at Wharton School, University of Pennsylvania. He's, world-renowned speaker on markets, and he's an expert when it comes to cryptocurrencies. And I think it's very important for us to be talking about this right now, especially in this environment where Bitcoin and the rest of the crypto market is crashing. So his website is werbach.com, and we'll have the links in the description area. I hope to actually get into the overall market in general, kind of talk about the nuances on what is potentially causing this to fall, the dynamics of the bear market, and maybe some of the future, what his thoughts are on the future of some of the different projects. So Kevin, thanks for coming on the line with me today.
Absolutely. Thanks so much for having me.
Well, let's start off here. Bitcoin fell below the $6,000 range here in November. And I think that was significant because it was sitting there for about 3 months. And it kind of put everyone at ease, after all of the chaos that we had seen, with it falling from $20,000. It seemed like we had bottomed out and we were comfortable once again. But the floor fell out from under it. And here we are with the brutality of the bear continuing to thrash the sector. So let's get your thoughts on this.
I think we've all gotten caught up in thinking that we understand what the crypto markets are and thinking that they are substantially more mature than they really are at this point. Clearly, there was a speculative frenzy. There was something of a bubble last year. And you have to disentangle the price movement of these crypto assets from the broader question of whether there's value in cryptocurrency and whether these markets are real and legitimate. The thing that's happened with the subsequent crash is you get all of these critics and skeptics coming in and saying, see, it's worth nothing. It was all a fraud. And that's clearly not the case. But we also are not at a point where you can have any confidence about the price level of cryptocurrencies just because the basic infrastructure is so immature. So, for example, there are very credible allegations about all sorts of manipulative behavior going on in crypto exchanges, mostly the ones outside the United States, and people doing all sorts of things to pump up the price. It's still not a very liquid asset. There still are a very small number of whales that have control of a huge percentage of most of these cryptocurrencies. So because of that, you can do any traditional kind of investment analysis, but you always have to keep in the back of your head that we really don't know what the fundamental value is here. There really isn't a history, and there are big question marks. So I think, to your immediate question, I do think a lot of investors in cryptocurrencies thought, okay, we went up to 20,000 and we pulled back to 6,000, and now that's the new normal. But there wasn't really any particular reason to believe that. And I similarly don't think that we should be confident now that we're at the end of this process.
Well, I tend to agree with you in the sense that this bear market, when prices go up, they go up further than they should. And when they go down, they overcorrect. So there's really no telling how low these prices can get. And I completely agree with you. And point well taken on, not really knowing or having a true price mechanism for what these cryptocurrencies should be valued at. I mean, definitely something that I've thought a lot about, as opposed to, say, precious metals, which we've had 5,000 years, 2,000 years of the world trying to figure this out, figure out the price. And, it's precious metals are obviously a globalized thing where people are already introduced to it. And it's saturated to a degree. I mean, sure, if we see some sort of currency crisis, I would expect them to go higher. But to the extent that no one else really needs to be introduced to them, I see that with precious metals. But on the cryptocurrency side, I feel like we're far from saturation in the sense that it still needs to be introduced in so many ways. And if you believe in the underlying technology with it, then it should go higher from here if it's going to become a true asset and the institutional money starts to come in. So maybe what are your thoughts on that?
It all depends on your time horizon. So I'm not a trader. I have a little bit of a few different cryptocurrencies, but I don't seriously invest in them just because I don't feel like I personally understand the price movements enough, and there's these uncertainties I'm talking about. I'm focused on the big picture, which is, why is Bitcoin worth more than zero when there's no government behind it? Why are any of these cryptocurrencies worth anything? And you gave a couple of the good reasons. There is a store of value thesis that this is a category of assets it's a new asset class, it's potentially uncorrelated, it potentially holds its value independent of government policies and so forth. There are various other stories to be told and various other valuation theses to be made. But the big question ultimately is whether this whole thing is real. And so that's what I focused on. I mean, my book is called The Blockchain and the New Architecture of Trust, because I think the key question is, can you trust the basic idea that a whole bunch of computers that can be run by anyone all around the world can create something that functions as money, that functions as a valuable asset? And so that's the story that I try to tell, is how we've achieved that. But the flip side is, just because the basic ledger is trustworthy, just because the blockchain technology is trustworthy, that doesn't mean that the whole system is trustworthy. So you can have fraud, you can have theft. There's estimates that 10 or 20% of all the value of cryptocurrency out there has either been lost or stolen or is completely inactive, that we don't even know what's happened. There are fraudsters out there. There is illegal activity out there. So that's the process we're going through now, is gradually regulators are creating a trusted environment for legitimate transactions. Institutions are coming in, and institutions are asking relevant questions. How do I ensure, for example, custody for these assets, so I know I have what I think I have? How do I understand what the kinds of price movements are? How do I understand what kind of protections I have? What are the risks I'm taking on? And so that's definitely happening. And so I think the vision that one might have, what you described, that these crypto assets are real and they may make sense as a valuable investment. I think one can certainly make that case, but it needs to be distinguished from having a confidence about where it's going to go tomorrow.
Yeah, no, that's an interesting thing, because we have this situation now where last year we saw prices go euphoric and everything seemed to progress so
Yep.
fast because of price. And I know a lot of people, want to try to ignore price and, look at the fundamentals and, act like they're not affected by price. They're not affected by purchasing at $20,000 while now Bitcoin is $4,000. I mean, there's real consequences to that, real psychological consequences to that. There were gigantic fortunes made because of price, and there are going to be massive bankruptcies because of price. And, we saw what the euphoria was. We saw what the euphoria brought. The mainstream media, we saw some different futures, CBOE, CME come
Sure.
online, and it really developed quickly in some ways. But the bear market, again, people have a hard time forecasting how bad this can be and how much damage this can do for the build out,
Yep.
to defer the build out for maybe some time. I mean, when you start hearing the news stories about the people going bankrupt and companies shutting down, there's a lot of psychological damage that's going to happen because of price. So maybe you could speak to that a little bit,
Yeah. No, so there's nothing. Look, people can make money over the short run. And as you said, people made a lot of money on the crypto bull run. You just have to understand what kind of story you're telling. If you have a reason to believe that there is an investment thesis that's going to make sense over the short run, then by all means go for it. But understand what the downside is of that. And I think, again, people somewhat got confused, thinking, okay, now it's going to the moon, without having any understanding about why it was going up so much. and retrospectively coming up with a lot of these, like, well, if you take 10% of the gold market, that's X billion dollars and so forth. A lot of that is basically just after the fact explanation. So again, the question is, what are you trying to do? Are you trying to find a greater fool and make some money in the short run, which again is fine, but understand what you're doing, or are you buying into the overall story? And the reality is, look, this is a very new asset class. There still are tremendous uncertainties. Bitcoin has been around for 10 years, but that's not so long, and it's really not so long since it's been worth anything over a couple $100s. And the other cryptocurrencies are much, much newer and much more uncertain than Bitcoin. So the reality is, markets always go up and down. Anytime you have a story that says the fundamental economics have changed, then it's a risky story. And again, risk is not an inherently bad thing in markets, but it's something you have to understand. I was very involved with technology policy 20 years ago during the internet bubble, and it's not exactly the same, but it was a similar sort of thing. During the dot-com boom, people said, we've now found magic, that you can create these companies and traditional metrics don't matter, profits don't matter, revenues don't matter, sales don't matter. It's just, if it's digital, it's the internet, that it's going to be worth billions of dollars. And then we had a crash, and all that blew up. And as you noted, when there is a crash, it takes down a lot of legitimate activity as well. So I'm just naturally a contrarian. I started a technology conference and analysis business in 2002 when the internet crash was happening, because I saw lots of brilliant people building incredible things, which were the foundations of what became social media and the next iteration of the web, that became much, much bigger, actually, than the dot-coms were in 1998 and 99. But in 2002, it looked like nothing. So yeah, we're potentially in a similar period. I frankly don't think we're at the bottom of this yet, where a lot of the cryptocurrency and blockchain-based activity that was based on just pure speculation and pure euphoria, that is going away. And the question is how much it takes with it. The good news is, first of all, the technology is real. The value proposition is real. The institutional investors are getting involved because they see that there is a real value in creating these new programmable crypto assets. And there's a tremendous number of really smart people out there who want to change the world, who are actually writing code every day to improve this technology despite the crash. And so in the long run, that's going to win out. But you can't ever have confidence that you can time the market on the upside or on the downside.
Yeah. Well, that's a beautiful thing. All right, so I want to get into talking about the cryptocurrency market. We use that to describe pretty much anything, but as you know, there's different baskets, right? It's a new asset class, and it almost be trying to, saying Apple is Bitcoin and describing Apple as the stock market, and then not really differentiating all of the different baskets. I mean, different companies represents completely different things, different use cases. And that's what we have with cryptocurrency. So to that degree, I mean, we have the sound money aspect, and then all of the other different cryptos. I mean, what is your thought in general? Like, what comes to mind when I ask you about the use cases of cryptocurrencies and where the value is?
Ultimately, the use cases should determine the value. So ultimately, if the reason that people are buying Bitcoin as an investment asset is because Bitcoin is a new decentralized form of transactional currency, that people are going to use it to move money, to buy things, or to move money around the world, if that's underlying the story about why it's valuable, then that actually has to be happening. And when those transactional volumes increase, then you can assess them and analyze them and build a fundamental value thesis. And people are trying to do this, but it's still so early and so speculative. But the point is, if that's your thesis about why Bitcoin is valuable, all right, then you turn to Ether, which is the second largest one, second or third, depending how you look at it. Ether could be used to pay for things, but it was built for a completely different reason. Ethereum built a network to create a decentralized computing environment, to be able to run applications on a decentralized network. And Ether, the cryptocurrency, is designed to pay for the gas, what it takes to actually buy computation on that network, which then became the foundation also for all these ICOs, all these token offerings. So ultimately, at the end of the day, if that's what Ether gets used for, then your vision about what the price of Ether on a market is should somehow be correlated with that use case. And on and on. XRP is about international financial payments transactions, moving money around the world through international payments, and so forth. Now, these things might change. What these cryptocurrencies use for does evolve over time. But the point is, sooner or later, there has to be an overlap between the uses in the real world and the value of the currencies. And that's somewhat gotten lost, especially with these ICOs. There are thousands of these currencies out there, and people just took them as you said, as just kind of one bucket. I think we're going to see more sanity come to the market where there's a relatively small number of these cryptocurrencies that have substantial take-up, where there's a reasonable case to be made that they're going to be used substantially. And then there are all of these new, basically, security tokens that are being created, where in a legally compliant way, new kinds of crypto assets are created. They're either tokenizing traditional securities, or they're tokenizing equity, or they're tokenizing the traditional assets. And when that's happening, then you've got some underlying asset or something that's being connected that you can then value. So yeah, I think that's where we're going. It just, as I've been saying, anyone who's investing today, and certainly anyone who's investing last year, have to keep in mind that we're not yet at the point where you have any confidence about those underlying values.
Sure. Well, and one thing that kind of correlated with the bear market in cryptocurrency is the regulatory environment that started to come into the picture. And I know you have some comments on this, the SEC crackdown. And this is, very interesting because, a lot of us are expecting cryptocurrency to become, largely an asset class. But if you have these regulatory crackdowns, how much do you see this getting in the way? And do you think it's something that can be overcome by just the fundamentals and the demand for its use in the world?
Yeah, again, it's a short-term and long-term thing. So clearly in the short term, especially recently, the enforcement actions against various ICOs have clearly been part of the mix in terms of why the price of cryptocurrencies have dropped. In the long term, though, regulation is a good thing. I mean, you look and say, okay, why are U.S. capital markets so liquid and so valuable? And you go around the world and look at the most successful capital markets in the world. Are they the least regulated ones? Do people come to the U.S. and invest in U.S.-based stock markets because there's no protection against fraud? No, it's actually the opposite way around. It's because there is trust that there is a legitimate, sound, consistent regulatory structure that if what you're trying to do is cheat people out of their money, that there's a good chance the regulators will go after you. And that's the way it works in securities markets. There are edge cases. People do put money in the Cayman Islands and in Malta and in Gibraltar and these other places. But even those places have to show that they are sufficiently legitimate. They're not just tax havens and not just opportunities for money laundering, in order to convince real institutions and large holders that they are worthwhile. So cryptocurrency is going to need to come into this regulatory structure. If it's trivially easy to use a cryptocurrency for money laundering or for funding terrorism, then it's just not going to be acceptable to the regulators of the world. It's not going to be acceptable to the banks of the world. It's not going to be acceptable to the companies of the world. And it shouldn't be acceptable to any of us. Now, that doesn't mean it needs to be shut down. That doesn't mean that regulators need to address those issues in a thoughtful way. And again, it's a lot of what I talk about in the book is regulation is not all or nothing. The question is how to ensure that the policy goals of regulation are met, which are really about trust. They're about protecting investors and creating a trusted environment. How to achieve that without fitting a square peg in a round hole, without saying you've got to do something that's just technically impossible with a cryptocurrency or we're going to shut you down just because you don't do things exactly the same way as a traditional asset class does, which is totally different. So in the long run, that's the process. And honestly, a lot of what I think happened last year, and I spend a lot of time talking to regulators. I do workshops with regulators from around the world and legal experts around the world. A lot of what I think happened was the regulators, the SEC and so forth, frankly, didn't want to overreact. They actually saw the potential of the technology, and so they didn't want to stifle the innovation. So they waited, even though they could see that there were problems, they could see there was fraud, they could see that there were unregulated, unregistered securities offerings going on, because they didn't want to regulate too much. And unfortunately, a lot of the market took that as a green light that there wasn't going to be any regulation at all. And so now what the regulators are trying to do, and there's different approaches around the world that's helpful experimentation, but the regulators are trying to find ways to have thoughtful, reasonable constraints on the bad actors without killing off the golden goose. And so over time, I think they're going to get there. Again, it's another one of these things where you've got to make a risk judgment in the near term. There is no question, I will say, that there are many more enforcement actions to come. We know the SEC has issued dozens and dozens of subpoenas. We know there are dozens of these investigations ongoing. We know there's tons of fraud out there. So I certainly wouldn't expect that we're at the end of this regulatory process.
Yeah, this is an interesting thing. And definitely the ICO market is more of that security introduction. I mean, people trying to raise money. Now, Bitcoin, because of the nature of it, I mean, it's the closest thing to a very natural monetary system that wasn't already, physically here on Earth, something bound by physical and chemical laws such as gold and silver. Even when the US dollar was removed from the gold standard, gold still remained, had its value, right? I mean, there's still, you couldn't really take the value out of gold. You could take the gold out of money, but you couldn't really take the value out of gold. And that's kind of how I feel to a certain degree Bitcoin is, because, of course, it was birthed out of the 2008 financial crisis. And as you alluded to, the US and much of the West enjoys a good amount of stability, and so we don't really worry about, to a great degree, a dollar crisis, but, we do hedge and, hedge against inflation and things like that. But the mainstream isn't panicking about a dollar crisis. But in other parts of the world where, governments have, run amok with their banking system and they are seeing hyperinflation, something like Bitcoin is a beautiful thing for them, despite what those governments want to regulate and do, because there needs to be an opt-out for people. And I think Bitcoin, in a certain way, transcends regulation, in a complete opt-out type of situation. Ultimately, it can't be regulated. Now, you can try to regulate it, but at what point can it be enforced? And are people going to comply to those regulations? Now, if you start talking about all the different securities and, everything acting in a very normal environment, I can see that. But, when you boil it down to sound money, just like precious metals, I find it hard to believe that they're going to be able to remove the value from Bitcoin that has already been taken a lot of momentum.
Yeah, so I disagree with the idea that it can't be regulated. And that's, again, one of the arguments that I make in the book. It's not about removing the value. And again, I don't think any regulators, in major jurisdictions around the world are interested in killing this off just because they're scared of it or they don't believe in it. They're asking much more specific questions, which is, what are the risks? What are the protections for investors? How does it get abused? And so forth. And it's absolutely true. Regulators could not shut down the Bitcoin network. It's decentralized around the world and so forth. But you got to get your Bitcoin somewhere. And the vast majority of the activity depends upon gateways between the traditional fiat currency world and the cryptocurrency world. Those are centralized points. Those are points where if you actually want the institutional money to come in, which is the thing that everyone keeps talking about, well, the institutional money is going to listen to what regulators tell it. And the institutions, if regulators say, if you are a licensed bank, for example, you cannot transact with any cryptocurrency entity. They haven't done that, but if they issued those kinds of rules, that would stop that money flow in its tracks. There also are the regulatory points of the miners in Bitcoin. There are the regulatory points of the software developers. There are the regulatory points of the exchanges. So it's absolutely true. This can't be shut down, but that's not what regulators are trying to do. What regulators are trying to do is to ensure that certain protections are in place. And so that's, again, that's the process that's happening. It's something of a misnomer, just to go back to something you said, and actually it's, again, a story I tell in the book. Everything comes back to trust. So it's not the case that Bitcoin was created in response to the financial crisis. Satoshi Nakamoto put out the Bitcoin white paper on Halloween 2008. It was a few weeks after the collapse of Lehman Brothers, but this was a technology he or she or whoever had been working on for years. And it was based on a whole community of people who had been developing digital money solutions for years. The key was, why did it take off? Why did this technology succeed when the other ones failed? Part of it's about just the technical soundness of proof of work and the Bitcoin consensus system and the other blockchain systems like it. But part of it is the timing, that there was this collapse of trust in society. The financial crisis did undermine people's belief that the traditional financial system was trustworthy. And so that's what created an opening. So the issue is really, again, to what extent do people trust either the traditional system or these new cryptocurrency-based systems? And again, at the end of the day, it's my contention there will be more trust and therefore more value creation and more value in systems where there's a baseline that you can have some confidence that the counterparty you're dealing with is not a thief who's going to run away with your money. That if, for example, there's a bug in the smart contract code that's executing on the network, and everyone agrees that there was a bad transaction that was not intended, there's some mechanism to deal with that. That again, if you have crypto assets and you think that they are custodied somewhere, that you have confidence that those are really there, and actually the entity that was claiming to custody them wasn't actually engaged in a kind of fractional lending process and didn't really have what they thought they had. All of that goes into trust. And so, again, it's not a story of regulators saying we're going to stop this. It's a story of the crypto world working together with the regulators, saying, here's what we can do, here's the potential, here's what we need, coming together with how to ensure that it's trustworthy.
You know, there's been no time in history where people were able to say with confidence, and some people did, I guess, jumped in with, both feet, but with confidence that they are uncertain about the future. When it was $20,000 Bitcoin,
Yep.
people were worried it went up too high. When it was
Yep.
$1, people, treated it like it was some sort
Yep.
of speculative penny stock. There was no,
Yep.
real foresight, or when it was say $100, $1,000. There was
Yep.
no time when people were questioning, is this a good time to be getting in? Are we too far ahead of ourselves? Is it going to be around? And I think to that effect, you got to just step back and figure out where you stand on it. If you are a believer like me, you think there is value in the future. I personally think this is a good time to dollar cost average. I think this bear market could go on for a while. Honestly, in my opinion, we could bottom. We might have bottom at 3,200. We might bottom at 1,500. But we're not going to know it's the bottom until months later. And even after we bottomed, it's probably going to feel like a bear market for 6 months after that, because you know what markets do. They bottom, they go back up to, let's call it $6,000 Bitcoin, and everyone gets comfortable there. And then the market washes and rinses investors and takes them back to $4,000. And, people are in this depression still, even after the bottom. So I think there's going to be a lot of cycling through what we're dealing with at the moment. And, I appreciate the insight you bring to the table here. And it's got me thinking about the regulatory environment, what cryptocurrency still needs to face, and just markets in general. So, Kevin, thanks for coming on Crush the Street. If people want to learn more about what you do, please share a little bit about your website and how people can reach out to you, find you, and learn about what you do.
Sure. No, you can find the book, which again is called The Blockchain and the New Architecture of Trust. The easiest way is either just go to Amazon or go to trusttheblockchain.net. As you said, I have a personal website that's got links to various articles and videos and other things that I do. That's at werbach.com, werbach.com. You can follow me on LinkedIn. You can follow me on Twitter at kwerb, KWERB. Those are probably the best places to go. I write for various outlets and so forth. And I appreciate the opportunity to speak to you and to your audience, and hope people will find this interesting enough to buy the book and send me their thoughts.
Thank you for coming on Crush the Street. We'll have the link in the description area for people who want the book and to learn more about you.